Welcome to the first video of this series where I will be documenting my investing progress to $1 million. Starting at the beginning of 2026, I will be uploading my progress towards 1 million once every 2 weeks, and I don't plan on ending this video series until I've reached that 7-digit mark, so these videos may end up going on for a while. But the sooner this series ends, the happier and wealthier I will be. Now, these videos are not meant to be an indication of the average investor's journey. My investing strategies, savings rate, and risk tolerance are catered to my personal lifestyle and are not optimal for the average investor. And this is certainly not financial advice. With this in mind, here are some details about my background. I am 26 years old, have a degree, and a stable job where I've been working since I graduated college. I am in a low cost of living area, have no high interest debt, and currently have no pets or children to support. I worked very hard to get to where I'm at today, but I am also incredibly lucky to be in a position where I can save and invest at a high rate. So let's get into it. I started 2026 with exactly $73,632.07 in my brokerage account. I will dig into the specifics of that later. I am planning on investing $1,000 out of every paycheck, which comes in every 2 weeks. This comes out to roughly $26,000 a year. Investing this amount will allow me to pay my bills, enjoy my hobbies, and keep a comfortable buffer in my bank account to deal with any emergency spending situations that may come up in the future without leaving any excess amount of money sitting there on the side. This has been a good investment amount for me for the past few years based on my own lifestyle. Not everyone can achieve this level of saving and may think it's overkill, and others may think that it's way too little. But this is just the right amount for me and where I'm at in my life. Obviously, life can change pretty drastically, and so I will provide an update if any factors change the savings rate down the line. So, at this rate, how long will it take me to reach 1 million? I will spend some time going over some investing strategies before digging into my own personal investments. Here is a spreadsheet I put together going over some hypotheticals. Keep in mind that these are estimates and I am ignoring the tax implications for now. Just bear with me. If I were to just set this $1,000 aside every 2 weeks, with no interest, no investment, no nothing, maybe I put it in a checking account or under my bed or buried like treasure. It's just money sitting there accruing exactly zero interest. If that's how I save my money, I will be a millionaire in 36 years. Or when I hit the ripe age of 63, just in time to retire a few years later. Sounds good at first, but in 36 years would I even be able to retire with $1 million? Swapping over to this page, I did some quick and dirty inflation calculations. Based on the approximate long-term inflation rate of around 2.5%, having 1 million today would be equivalent to having close to 2.5 million in 36 years. Therefore, this hypothetical $1 million I have saved up over 36 years will only have the buying power of just over $400,000 in today's money. That would hypothetically be enough to retire, but depending on lifestyle, age, and number of dependents, this might not be enough for a comfortable retirement. Even with a high savings rate, if your savings aren't gaining interest, you still might not have enough when it comes down to it. This is scary, but let's be real. No one is storing their life savings under their mattress. At least I hope not. The most obvious location to store one's savings in is in a high-yield savings account. Being a step up from your mattress, these savings accounts offer interest rates of around 4.5%. If I go entirely with a high-yield savings account, it would take me roughly 21 years, which is a huge step up compared to the 0% interest rate. In fact, by the time I would reach 1 million at a 0% interest rate, 36 years, the high-yield savings account strategy would be over 2.5 million. This seems like a nice option, but in reality, high-yield savings accounts barely keep up with inflation. So what are our other options? Well, we have the stock market. In its most simple form, we have the S&P 500 index. With an average rate of return of around 10%, the S&P 500 is widely considered the baseline for market performance. So how would our outlook be if we dumped all of our savings in the S&P 500? This would put us at 1 million in just 14 years. In 21 years, you would have double the amount of the savings account, and in 36 years, when the mattress saver finally reaches 1 million, you would be sitting at over 10 million. If you learn one thing from this video, let it be to invest your money. Investing in the market can net you millions when compared to even the returns of a high-yield savings account. And with funds like the S&P 500 being so easily accessible, it really is a no-brainer to invest in the market over either of the other two options. You are just leaving money on the table if you don't. And honestly, if you're living off of a modest salary, it might not be possible to make it to retirement without having some amount of money invested in the market. But what if 10% is not enough? I'm young and not looking to retire anytime soon, so I have the luxury of being able to take on higher levels of risk for higher average returns. This can come in several forms, like investing in real estate or buying a food truck, but what we are going to focus on here are growth stocks. These are higher risk stocks that offer much larger returns due to their risk and volatility. These growth stocks greatly range in their level of returns, but we can get an idea of the average returns by looking at growth ETFs, which are just collections of growth stocks. These can average returns of 15 to 20% depending on the ETF. And we can see how that will impact the time it takes for us to reach 1 million, as well as the amount of savings at retirement. These higher rate of returns are very difficult to sustain long term, but I would be pleased if I could reach an average rate of return just over 10%, which would get me to 1 million by my late 30s. Keep in mind as well that these calculations are estimates. The actual total will vary from this spreadsheet since I have it set up to compound 26,000 once a year all at once, when in reality I will be splitting that yearly investment into 26 smaller investments of 1,000 every 2 weeks. I can include the spreadsheet in the description of the next video if anyone is interested in plugging in your own numbers and seeing where you end up. Like I said before, this spreadsheet completely ignores the tax implications. I will obviously have to pay capital gains tax, and I will try to minimize this by holding all my positions for more than a year, so that I can pay smaller long-term capital gains tax instead of short-term capital gains tax. Either way, my plan for tax season is to withhold a few of my bi-weekly deposits and put those towards whatever taxes I owe on my capital gains that year. With the criteria established, let's dig into my investments. Most of my account is invested in individual stocks. I don't own a wide variety of stocks and tend to only invest heavily into stocks that I'm very convicted about. Some of the big positions in my portfolio are Rocket Lab, Robinhood, and Nvidia. These are all companies I believe in and have done a fair bit of research on. I'm not going to go into detail on why I believe in each of these companies, but I will mention which stocks I have my eyes on and which ones I'm looking to trim at the end of each video. Regarding account growth, there's only been 6 trading days this year, and so far I'm up about 6% year to date, which is pretty incredible. Hopefully we will get to see that momentum continue throughout January, but I wouldn't be surprised if we see a bit of a pullback over the next few weeks. Other than individual stocks, there are a few other strategies I utilize involving options. Understanding options is not required for this video, and I'm not going to teach about options right now, but if there is interest in learning about options, let me know in the comments and I can link some references that I have used to learn. First, I sell covered calls against my shares. This is why I try to accumulate shares in increments of 100. I will sell these covered calls when I believe the stock is overextended and due for a pullback. I target about a month out and roughly 20% out of the money depending on the individual stock. I will also occasionally sell puts on stocks that I like when I have the cash to cover those puts. I occasionally invest in leaps as well. Right now, these long-dated options make up about a fourth of my account. I usually buy these well out of the money and aim for an expiration date of at least a year out. That way there's plenty of time to capture a potential large move in a stock price. At the moment, I have my eyes on filling out some of these smaller positions. Getting to 100 shares of SoFi, Nanonuclear, and Nibius would be nice, and I'd like more shares of Grab too. In terms of selling, I'd like to get rid of this Rocket Lab $30 strike price leap that I purchased back in April, but I'm sitting on quite a bit of unrealized gains with this call. It shows November 22nd here, but that's just the date I transferred my account over. The price correlates with the prices back in April. My plan here is to wait a few months until I've held this position for over a year before selling. That way I can take advantage of long-term capital gains tax instead of having to pay short-term tax on my gains. Other than that, I'm not looking to get rid of anything at this moment. I am interested in selling some Nvidia calls soon, but I'm waiting on the stock to be well over 200. Other noteworthy positions include these 2 Rocket Lab covered calls, which I sold a few weeks ago after the stock had a pretty large gap up. This stock has taken quite the ride over the last few days, peaking at just over $88 today, but it has settled down to just under $85 at the moment. If Rocket Lab stays above 80, then I will probably be rolling out that covered call to a later date. I will let you know how that pans out in the next update, but hopefully that call will expire worthless and I won't have to worry about it. Before moving on, I want to clarify that the purpose of this series is not to flaunt my progress or make anyone feel envious. I hope above anything that these videos will inspire people to take control of their own financial journey and motivate them to invest in a brighter future for themselves. I want to hold myself accountable to a consistent investing strategy and demonstrate the highs and lows of investing in the stock market. I'm sure some weeks will show exceptional growth, but I know other weeks will be incredibly disheartening, and I'm prepared to document it all. Well, that covers the basics of this series. I'm planning on uploading once every 2 weeks on Sunday to show my progress. Most updates will only take a few minutes, so future videos will be a lot shorter than this one, unless there is significant news to discuss. I may even consider turning this into a shorts format in the future. Thanks for watching, and I hope you tune in for the next one. Take care.